Hello, entrepreneurs. Joe DeChara back once again, coming to you live from downtown Flushing, New York, with another amazing episode of Joe DeChara Presents How to Win at Business. These are strategies that I have learned, implemented, tricks of the trade over the last 35 years. I've been in accounting. I am a CPA. If you don't know who I am, I love talking about small businesses, especially brand new small businesses. And the next couple of weeks, I'm going to be going over a chapter every night, just about every night, unless I interview somebody in my itty bitty S Corp book, because I believe that out of 25 million sole proprietors out there, that I don't know, at least half of them probably should at least look at being an S Corp. And so we're gonna talk tonight about chapter 2, which is who should own an S Corp. Because not everybody, first of all, not everybody qualifies to be an S Corp. I mean, you have to be a U.S. citizen. You got to have a business. You got to have, less than 100 shareholders. Most businesses don't only have one owner. And so what we're talking about here, so let's narrow it down to the people that I'm talking about here, because I don't want any more confusion. There is enough complications and confusion out there, which is a big part of the problem. That's probably the crux of the problem. And let's talk about what the real problem is here, folks, because last night I went through what an S Corp is, how and why they were created. S Corps were created in 1958 because there was a huge gap, wealth gap, between corporations and sole proprietors. That was, unless you had a partnership or something, that was the only choice. You were either corporation or a sole proprietor. Now, being a corporation was complicated, and there was double taxation. And what that means is there's a tax at the corporate level, and then you get taxed again when you take out the profits from the business in the form of dividends. So only, basically rich people were running corporations. Well, this is a problem. That's not what capitalism is supposed to be. It's supposed to be, we all have an equal chance. Anybody can get rich. Well, the sole proprietors weren't getting rich because proportionately they were paying more in taxes than the wealthy corporations. Does this sound familiar? I mean, does this sound familiar? Like, the rich keep getting richer. Has anything changed? I look at the facts and the results of since S Corps were created, and nothing's changed. It's gotten worse. It's gotten worse, folks, because now we have a lot more businesses, a lot more people running businesses, and for different reasons. But yet, most business owners have not adopted the S Corp solution. And why is that? And I don't want to get off topic, but tonight is going to be about who actually should own an S Corp. And I have been butting heads for years with other professionals about this. And for me, people, it's black and white. It's simple. It's based on logic, simple math. Yeah, we know what the tax rates are. All we got to do is plug it into a worksheet and say, oh, this is how much I would save as an S Corp. There's the legal issues. And that was another thing that sole proprietors had to bear. They had no legal protect. There was no legal shield, which meant if there was something wrong with the business and the business was going to get sued, these sole proprietors' personal assets were at stake. So that's not a good way to run a business. You got no legal protection. Your tax rate when you add in Social Security taxes is higher than the wealthy corporate owners. The people that were corporate owners were investors. They could keep their profits in the business. So there were two classes. That's it. It was the poor businesses and the rich businesses. And they created the S Corp to bridge the gap. And now what S Corps did was it gave business owners the legal protection, and it eliminated the double taxation that made it hard for sole proprietors to afford to be a corporation. They just couldn't pay taxes twice. I mean, it didn't add up for them. So we have the sole proprietors that are basically, trying to scrape by. And that's the truth. One of the misconceptions that I had, I guess, growing up was that I thought that when you have a business, you get rich. Why have a business if you're not getting rich? Well, it turns out that a lot of people just have a business because they can. And instead of having a job, and now a lot of people just have businesses as lifestyle businesses, such as like what I did. I couldn't work for, actually, I'm a bad example, but people that, are caregivers, maybe they start a business so that they can be around to take care of loved ones. But we still have this gap, folks. So in 1958, there was maybe, let's say, 6 million businesses altogether, maybe 3 million sole proprietors, or maybe 4 million sole proprietors, and only about 2 million businesses. Today, we got 30 million businesses. And the internet has a lot to do with that because it became easy to have a business. It became easier. And today, I don't know if it can get any. The only thing that makes it hard is the government with all of the compliance and all of that stuff. And they're making it harder and harder. Like I said, to open up a hot dog stand in Manhattan, you need a CPA and a lawyer because of all the registrations and legal stuff you have to go through. And that's it. So my purpose in life, my mission has become to make things simple and easy. And this S Corp issue has really basically taken over because this is the crux of the problem. Because for me, in my profession, the people that I work with, business owners, CPAs, people that know about taxes, about preparing taxes, about the outcomes, about the audits that happen. We know about S Corps. And that, because I was in that little bubble, I never realized that there were 25 million sole proprietors. So one of the reasons why I didn't know that is because on the SBA website, they don't call them sole proprietors. What they call them is non-employer firms. So to me, that is more than just a play on words. I believe that they just don't want to call attention to how many sole proprietors there are out there. And so I asked myself, so if being an S Corp for so many sole proprietors is the way to do business, why aren't they doing it? Why aren't these people that logically, based on fact, the law, they should be classified as S Corp? So why aren't they? Well, part of the problem is the confusion. The confusion over the benefits of being an S Corp. And believe me, folks, this is by design. It is not by chance. The results, if in 1958 the objective was to bridge the gap for sole proprietors to become corporations, why didn't it work? Why didn't it work? Well, when you scour now we have the internet. Before, you had libraries and you had to actually research. Now you can just Google stuff. But when you Google stuff about choosing what type of entity you should have, you know what's up there? The complications of being an S Corp, the complications of electing to be taxed as a small business corporation, and how difficult at the state level it is to operate a corporation, and how simple it is to be a sole proprietor. So it was almost like they are encouraging people to stay as sole proprietors. Recently, they have more taken, and what I'm talking about right now is the SBA. They have taken less of an advice perspective and more of, okay, this is what a sole proprietor is. They're not saying anymore that it's simple. They're not doing the comparison to discourage people from being a corporation, because that's what they're doing, folks. They're discouraging people from becoming a corporation. Why? Because it's a way to keep people poor. It's a way to keep people down. It's a way for the government to keep control of people. That's the conclusion that I've come up with after years of research and just scratching my head. And the fact that I get blowback from other financial professionals, financial advisors, attorneys, people that never prepared a tax return, that never registered a business, that never had to clean up the mess of somebody being a sole proprietor and getting audited and losing everything. Those people are, for some reason, advising their clients that it's okay to stay as a sole proprietor. It's okay to be, oh, you should be an LLC. Well, let me tell you something, folks. LLCs were created for passive investors. It started in Wyoming for people that wanted to invest in oil drilling and wanted the pass-through tax benefits without the legal liability. They were not created for operating entities. And the IRS says, listen, you're an LLC. We don't recognize LLCs for tax. We don't know. So in other words, if you're only a one owner LLC, we're going to make you be a sole proprietor for tax purposes. So LLCs are a legal shield. There are no tax benefits. If you become an LLC, you have to tell the IRS, oh, I want to be taxed as a corporation. I forgot. We became an LLC for legal reasons, but now we want the tax benefits. Well, then why not just become a corporation? So I was talking to my coach this morning about this issue. And, so he owns several S Corps. He also owns corporation, regular C. He also owns LLCs. And he told me, with LLCs, you can create a partnership that has, disproportionate percentages from, you can be a 10% owner, but get 50% of the profits. Let's say you're bringing all, so you can make, it's a blank slate. You can make any legal partnership agreement with somebody. If that's what you want to do, you can't be an S Corp. It doesn't work like that. S Corps, if you have more than one owner, have to be distributed according to the percentage of the ownership. So let's talk about who shouldn't be an S Corp first. If you have a hobby and you're making a couple of $100 a year, but you got to claim it on your taxes because now there's 1099s being issued or whatever. Well, you probably don't have to be an S Corp. Okay. Unless you want to start treating that hobby like a business and get all the tax write-offs, because you don't want to take the tax write-offs as a sole proprietor. When you do that, you are putting yourself at risk to be audited by the IRS. So the people that are out there, the professionals, the attorneys, the financial planners that never actually handled a tax audit, that are only looking at a tax return as a number, you should not be advising people on their legal entity choice. And it's as simple as that. So where was I? So the hobby people, it's a little side thing. It's not even an issue. Like my son-in-law has this little poster thing. I encourage him to create a business because that's what I do. I said, all you got to do is, take it from a hobby to you want to make money, and then we can create an S Corp and write off part of your house and get all the tax benefits. But he's not interested in that. So he's got a hobby. He's not going to be an S Corp. People like my coach, Larry, that owns, a lot of businesses, has partners, you're at a whole different level. So I'm not talking to you. I'm not talking to the people that have hobbies. Okay. If you want to have a business with partners, then you want to look at all of your options. Okay. Maybe you want to do an LLC and do a S Corp election. It gets to, that is a complicated situation that you really need to sit down with an attorney and a knowledgeable tax pro. Okay, don't have to be a CPA. You can go to an enrolled agent. Enrolled agents are specialists in taxes. So CPAs are, it's not necessarily taxes. A lot of CPAs don't do taxes. So if you're going to have multiple partners, if you have some kind of thing going on, you should look at all of the options and sit down. The people that I want to talk to right now, are the people that are still sole proprietors. So the question is now, who would benefit from being an S Corp instead of a sole proprietor? And I will make it very easy for you. If you are a single owner entity and you have a business, you need to be a corporation, not a sole proprietor, without question. And it should be set up immediately, without question. So if you're one of the 25 million sole proprietors, and that includes LLCs that have not elected to be a corporation, to be taxed as a corporation, you should be an S Corp or a C Corp at least. Now, the whole difference between being the C Corp or electing S status has to do with your current tax situation. So if you're a sole proprietor, the first thing to do is to become a corporation. Then decide based on timing, your profits, and when your expenses come. Then you should, once you become profitable, you want to be an S Corp. Hands down, no questions asked. And I will debate anybody that wants to come to me with facts and circumstances, and we will put down on a worksheet the numbers, the taxes. What did you pay last year? What would you have paid? And then you could factor in the lower audit risk that S Corps bring, the legal protection, the status in the business world that being a corporation brings. You know, that's another thing that people don't consider. I'm not doing business with a sole proprietor. Not serious business. If I'm a general contractor and a guy's a sole proprietor, I'm not doing business with them. And that's the facts. And that's my story, and I will stick to it. And if you're one of those people out there that don't agree with me, PM me. I challenge you to contact me and give me some of the facts, and then we'll go through it. Because, folks, I am tired of debating this with people that should know and debating it with people that shouldn't be talking about it. So, happy Friday. I hope this helped. And I hope I'm getting the message out there. God bless. Have a great night. And last but not least, I do want to invite you to Mastermind with Joe DeChara. We have amazing trainings every week. We get together, hot seats, business solutions. It's still free, so jump on it now. Thank you again, and I will see you tomorrow with Chapter 3 of the Itty Bitty S Corp book. Thank you.